Okay, good morning, traders, and welcome to this live intraday strategy webinar. Today is Tuesday, March 23rd. Mike Boutros with you on the horn. Good to be with you guys this morning. Interesting start of the week. It's been kind of slow. We're getting a lot of range-bound action, but the levels are clean, okay? So it's been a pretty quiet morning. Yen is the only strongest performer against the dollar. Everything else is lower. And the dollar just continues to hold its own. You know, we went over the implications yesterday in the on the Daily FX webinar of what the Fed meant. I can't tell you guys how many conversations I've had just over the last 24 hours regarding that same point: was the Fed dovish or not? Either way, DXY is still trading towards the high. We'll look at those levels: euro, gold, SPX. Dollar CAD at resistance, sterling with a bit of a breakdown here into support, Aussie with a breakdown, dollar peso at resistance, nice range there. Just a note on dollar Swiss. I know, Pete, you've been asking about that for a while, so we'll just take a look at dollar Swiss and we'll round it off with a good look at dollar yen. Keep in mind, you do have Powell and Yellen. Interesting combo, both testifying before Congress, so those comments are going to likely continue to feed out into the headlines. But let's jump right in. So here's what the DXY looked like back on, I guess this was the 16th, okay? Right ahead of Fed, we were right in this really tight range, just below resistance. Take you back to the weekly charts and where we are on that front. You know, the big level is still 92.07, 92.28. That's the weekly threshold we would need to close above. Hey, man, great to see you. Good morning. That's the weekly threshold we would need to close above to mark sort of resumption, okay, of this breakout that we saw into the close of February, open of March, I should say. But until we clear that level, I'm still skeptic, okay, near term. Now, we don't have much by way of economic data. Durable goods are on tap. I believe tomorrow you do get GDP. After that, into the close of the week is the real big hitter, core personal consumption expenditure, the PCE. That's likely to give us a kick, but as it stands right now, man, I'm hard pressed to do anything, right, on a fresh positioning type of outlook. Not from, if you're holding longs, you're bringing your stops up or better at this point. But here's the daily chart. You know, looks a bit tired, but still constructive, well above 91.24. There's 92.46, the basic 236 of the decline off last year's high. That's what you need, sort of mark the resumptive move. So we could get a whole lot of this over the next couple of days still until we clear this range out. Here's the intraday chart. There's really nothing to write home about. All things held constant, we made a basic weekly opening range. If it breaks here today, it's too early to call it a weekly opening range break. You're just still looking for the resumptive move towards 92.46. But from a new positioning, there's really nothing to do here. Constructive above 92, 91.24, 91.32. So boring, unfortunately, is the name of the game. If we take a quick segue into euro, it's pretty much more of the same. So here's the euro update from Sunday. You know, we talked about this 150 pip range, 1850 basically into 20. That's basically what we need to clear. Again, look at this on the weekly chart. We just came off of pretty big support. Okay, here's the bounce. This is still your focus range. I mean, again, you could envision a scenario where you get a whole lot of this, just chop. We need that pivot below 1835, 1845 to mark the resumptive move here. No surprise, it's the inverse of DXY. So something's got to give here. Till it does, keep the powder dry. Don't get too aggressive on any of these moves. You know, you're likely to see a little bit more range bound back and forth before we do anything. There's 1835, upslope support, downslope support. It's loaded. It's loaded right here. Both of them are boring these days. Yeah, you're telling me, man. They are certainly boring. So I won't bore us anymore with a deeper delve there. We'll leave that as it is. No change on any of the euro levels from Sunday. Take it that move down into gold. Here's where things start to get interesting, but we still need that kick in momentum. So remember this slope? Showed you guys this slope last week. We've been following it for a couple of weeks actually, and we opened the week right into the March open, and we've been doing this little dribble here, right? What the hell is that? Well, if it's a break, you'd want to see resistance along that plane, and we did see resistance there yesterday. Still could get another push back into Friday's highs, but it's just too tight. It's just coiled. Now, ideal scenario here, let me take you a step back here. Ideal scenario, even if you get a probe higher, we get failure at 1764, 1767. That's sort of the line in the sand. That's bearish invalidation. 2 equal legs off the low, if this is corrective, still gives you 1762. So even if we were to pump fake a little bit higher from here, that's where I'm looking for exhaustion. A buckle below 1725 gets you back on path, at least for a resumptive move. Another one where the levels are clear, there's just no Momo. Daily momentum at 45, intraday momentum, same type of figure. There's not much going on here, guys. But as I noted yesterday, the longer these little tight ranges hold, the more we get sideways, the better the move's going to be ultimately. So another one, keep your powder dry, look for topside exhaustion ahead of 1767. If this is moving lower, a break below 1725 gets us on our way. One other thing I was just looking at, if this does, if maybe that was a more important low, and this is just going to correct, even that would take it down to like 1710, 1707. So let's see. See if gold makes a move here. It's number 3. Last but not least, here's SPX. This one just continues to pay. I mean, you can't make this stuff up. So into the start of the week, our assumptive move was, listen, we came off of big support. Friday was big, okay? The level that we had focused on was 38.87. It was a basic 38.2 of the rally. But more important, it was downslope support and upslope support for the current formation we've been off of from the March lows. So you could see we got the rebound. We even went back early in the week, tested that low again. We got the rebound. Here's the pump. 618 retracement. After we broke higher, we used that range, gave us 39.50, bearish inval 39.71. That doesn't change, but here's the turn. Long story short, another one where you're ranging into the start of the week. Here's your weekly open essentially, and the broader risk is still for the exhaustive move and a push and a pull lower. Remember, Fed day or thereafter, we posted a massive outside day reversal off the record high, typically a bearish development. And so on whole, our base case is looking for exhaustion on this top side. It's got to happen somewhere here. We got this turn yesterday with a 2-hour reversal candle. Ended up being, wasn't a 4-hour reversal, but it was a 2-hour outside reversal here, turned lower. Same levels, nothing changes. Slope support comes in just below 39.20, like 39.15. That's your key level there and the lows. So I don't think we're out of the woods yet. We might get some commentary today from Powell or Yellen or something that could trigger a market move, but at the end of the day, the vulnerability is there. It's identified, okay? Again, too early to make this call, but if we do crack that upslope support, look where that 100 comes in. Right on the 50 of that range off the March lows gives you 38.55. Too early to mark that 100, but in the scenario where we fail again at 39.50, that's kind of where you want to be looking. Questions on SPOOs? That was number 4. All right, a quick run through here on some of the other ones that are moving, at least in the near term. Here's dollar CAD, and here's what dollar CAD looked like last week. So Post-Fed, we got that big old reversal. I'll take you back to the daily chart real quick, okay? Massive outside day reversal off the lows. We noted there was some slope support there, 1 touch, 2 touch, 3 touch. It's the 4th touch there. Big reversal. And where do we go right back? Here's the weekly charts, guys. You remember this same level? We're there again, 26 handle. Here's the weekly chart on dollar CAD. Massive range, 126 into 125, 90, 80 it was, right? Here's the big rebound, downtrend, channel support. Here's an 88.6 of the entire advance from 2017. Perfect kiss. I think we missed it by like 4 pips. 64 was a low or something. And here's the rebound. This is resistance. This is a major pivot. 2018 open, 786 retracement. You got a lot in this zone. Yearly opening range lows, right? It's all lined up right here. Watch the weekly close. If we close above 26.19, in my humble opinion, we could possibly discount this whole move below 26 as a false break. Pretty big false break, but that would basically have me looking back for a move back towards the weekly, the high week close there at 27.74. I put this chart out on daily FX yesterday. Really very telling. I think that's all we need to know. That's all we need to follow right now on dollar CAD. Look for inflection off this major resistance zone. Here's what it looks like on the daily chart. I might have added this in on the webinar just to, or maybe last night while I was scanning. Here's just to show you the 618, okay, of the monthly range. Here's your March high. Here's your March low. 618 converges. Stop traffic, 126. The 2018 open just lower, 786 just higher. Slope resistance off the March trend line of last year. Here it is. I don't know if you can see that at home. Can you see that on your screen, guys? This blue line, 1 touch, 2 touch, 3 touch, attempted break, 4, 5, 6, 7 touch. Here we are again. Dollar CAD's at a big zone. This is what I'm actually paying closest attention to in the days ahead. Now, you don't have any loony data. You don't have any event risk from Canada's side. So, we're really going to be watching this one like a hawk. Here it is on the intraday chart. So you got a break of that near-term formation that we were following from last week, and it's now taken us right into key support. There's the formation. You're looking at 25.27. That actually held last week. Opening range high for this week. Here's the pop. Here's the block. Watch for inflection there today. An intraday support near intraday support near 25.27. That's the April 2018 low. It also is just pips above the weekly open. So if this break is legit, okay, I'd want to see this hold. Right here. So if we get pullbacks today, that's basically what you want to see hold. If this tie is really gonna give out, we don't want to see anything lower than that. So interesting setup here, on dollar CAD. I'm really looking to see what the inflection range is above or below this 126 level. I think that's going to be the tell for us here on Looney at resistance. Any questions? Number 5. Okay. So sterling looks like this. Big move lower, but into support nonetheless. So we kind of resolved and gave up on sterling on this slope. Here's the slope I was showing you guys last week. This pitchfork off the low. We had both of them, right? Here's the consolidation in purple. Here's the slope in blue. That slope gave out, kind of recovered again, turned pretty messy into the close of the week. So we said, let's focus on the consolidation. No change to the levels. We're here at support, having broken this consolidation to the downside. If this is a legit break, Okay, comes down there anyway. Perfect. So if this is a legit break, what I want to show you is the measured move takes you down into like 35. It all is determinant today on whether 37.43, 37.50 gives out. Okay, so either way you slice it, we're looking for inflection today on both of these trades, specifically dollar CAD and sterling today as they come into major inflection zones. The break sort of validates the consolidation, the multi-week consolidation move lower, and the measured move again comes in right here. Now what you see here in blue is also a measured extension of the decline off the highs. So either way, looking to see how this sort of pans out over the next 24 hours. 100 off the high, the measured consolidation break, both point towards 35.38. Now, if you guys recall, I've actually been pretty constructive sterling, and even into the start of last week on this rebound, I was kind of looking for the stretch up here towards 40 and change, 40.30 more specifically. 40 held, consolidation broke lower. The focus is on this pivot right here. You do have a whole ton of sterling data on tap this week. Okay, starting tomorrow, you get core inflation readings. I guess I'm sorry, most of it's from the dollar. It's just tomorrow, and today we got the employment change, which actually was a little bit better than anticipated. So those are the levels for sterling. No change. Big risk here if we buckle below 37.40s. It's kind of the focus there for sterling. Next up, quick look at Aussie. A breakdown there takes us also into near-term support or just above. Here's what it looks like on the intraday chart. Let me take you real quick again, a reminder of where Aussie's coming from. Big reversal last week off of a key resistance zone. We've been talking about this one for years, 78 into 78.36. We did peak above there in late February before turning lower on a massive weekly, reversal candle. And we've kind of been looking for the correction to push a little bit lower, but nonetheless, here's your yearly range, guys. Yearly. I mean, give me a break. Something's got to happen here. Here's the daily chart. Guys, here's your monthly opening range. You set a high, you set a low in the first 8 days of trade. We've been in that range ever since. Key support still 76.35. Near the opening range lows for the week, but it's also that 38.2. Key resistance is still 78. And until something happens, you know, if you want to flirt with her, go ahead and flirt with her, but don't propose, okay? There's nothing here yet. Hopefully we get a kick on this. Here's what the intraday chart looks like. So near term, it did look like it gave us a little bit of a break of near-term uptrend support. It's a little bit different from the pitchfork I was following here. That pitchfork actually did catch the highs. I was looking for something of a little bit more definitive a break. So, you know, it's essentially the same slope. Here's the break. Not much follow through. Look for resistance at 77 today if this is legit. Big support, still 76, 76.35. Little bit better. Wouldn't say it's as bad as Euro or DXY, but from a new positioning, again, for our purposes here, our new intraday or weekly positioning, there's just nothing here. Nothing here yet. Okay. Also, another trade I wanted just to review real quick was peso. You know, I covered this one last week as well, just giving sort of light to this key resistance zone. I want to see if this range holds. It's held, well, at least so far. I do think it eventually pops higher, but the setup remains pretty darn clear. That low held, we buckled back above 2,600, okay? And that's basically what gave us that rise into key resistance. This is still key resistance with your weekly opening range setting up just below. So again, remember where peso is on the bigger charts. We came off of huge support. Here's your monthly open. Here's a basic 38.2. Here's your first focus range right now is this major zone for the last 2 weeks that we've been in. Now, ideally, just going along with the dollar theme, I would prefer this to exhaust on the downside to give us a push higher. But at the end of the day, it's pretty well coiled and it's a simple weekly opening range. Respect to break below 2028, excuse me, to mark the resumptive move, but we need to see a close above the monthly open. Don't discount that if we get it. So that is a look at peso. Any questions on this one? A quick segue to Swissy. I know there was some questions on this. I'm not really oppose it. I don't oppose it, but it's one of the ones that are most range bound. Okay, so again, recall Swissy from a weekly chart, from a weekly standpoint, came off a big break. This was massive. We talked about 90-80, 90-90 for months. Here's the buckle back above. Boom, accelerated shots, exactly what you want to see. Ever since then, kind of stalled up here at resistance, and look at the last 3 weeks, guys. That's a range you want to respect. That's a range you want to look for a clear break. Here's what it looks like on the daily chart. Boom, 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 boom. It's ping pong. Ping pong. 92.30 support, 93.20 resistance. You need to break out of that upslope, which is at the monthly high, or the yearly highs, I guess, to get the resumptive move higher. Now on the intraday chart, it's even clearer as far as just the real tight range that we're in. Here's what it looks like. Again, we were looking at that downslope, hoping to get something as far as maybe a break of this bear flag to mark resumption. You got the break, but didn't really mark resumption, did it? So again, guys, puts the focus on 92.30, 93.20. Look for a break of that range. The long side is the preferred longer term move, but it is a pretty mature trade at this point. So if it does correct lower, you'd be essentially looking for 91.40, 90.90 maximum for sort of a more meaningful support, a more meaningful low. All hands on deck right now for this 100 pip range first. Okay, so that is Swissy number 9. We are flying through these. Last but not least, and I'll be done in a record half hour here, is dollar yen. Oh, and then we'll take a quick look at Bitcoin, which looks like it's under some pressure here. But dollar yen looks like this. So if you guys recall, the last dollar yen update I gave you guys was on the 15th, and that's because we were heading into major resistance. Here's the weekly chart. This is, I guess you could live off this chart for dollar yen right now. Big resistance. We talked about that multi-year slope resistance from 2017. Current operative uptrend resistance from the yearly lows. Big level. Again, you cannot make this stuff up. Look on a closed basis. So the threat has been the exhaustion for the upside on dollar yen. And I think that's what we're starting to see, but it's not very convincing. Here's the daily chart. Even here, we noted early in the week the divergence that we're getting, the price action pushing to a fresher high, the oscillator making a lower high. Here's your break below 70 in the onset of what could be a larger pullback in dollar yen. Now, if this is, I just want to show you what this looks like. A basic retracement of the yearly range would give you a 38.2 down at like 106.08. Pretty aggressive. 236 would be 107. I'm going to leave this on. I know it looks very messy here. I'm going to leave this on just for reference right now, but just to show you, the initial pivot is 108. Depending on where we are in time, it's going to be either a 236, which is 107.77, or the median line that gives way, or that gives us the tell that there is a larger reversal at hand here. Right now, the only thing we focus on is this 108 handle. Okay, big pivot in price. If we do get a break below that on this divergence off upslope resistance, you would start to think correction within the uptrend. If this holds, man, it's dollar yen, dude. It could do another one of these. But that's the focus for me And that has been the focus for me. Here's what it looks like on the intraday chart. The 2 hour, you might as well watch paint dry. Here's the 240. Here's the 4 hour, right? Same levels, nothing changes. Looking for that possible break below this 108 handle to suggest we got a bigger turn here in dollar yen near term. Any questions on the abomination? Again, dollar yen tends to be pretty sensitive to US data, so watch as we head into durable goods, GDP, and core PCE this week. Yen, one of the only performer that's strong against the dollar today. Okay, last but not least, Bitcoin. Just want to take a quick look at this because the levels continue to shine. And if we are to interpret this as a break of uptrend support, suggests we got some problems. Now, before we make that assumption, the consolidation structure is kind of what I'm focused on now. I'll come back to this in a moment. Here's the daily chart. Whoops. Here's the daily chart. So recall the radical divergence that we got into the highs, right? Price action making a higher high, the oscillator making a lower high. That's the third divergent reference point on all three highs this year. January, February, March, lower high, lower high, lower high. So, that doesn't mean anything on a trade like Bitcoin, which is so sentiment driven. It doesn't mean anything. We can stay there forever. The point is, now we're starting to make the first initial break of uptrend support. Here's the pitchfork we've been following off the yearly lows, or at least late January lows. Support, support, support. Is that a break? Well, if it is, we should be looking for resistance ahead of yesterday's high. Bearish invalidation at the high day close at 61,165. But boy, what is this? Pretty precarious, right? Here's what it looks like on the intraday chart. There seems to be some sort of near-term consolidation and play off the highs here. So you have lower highs, you have higher lows. And the break would even give us more conviction on the measured move. But until it does, you know, it's a very high-strung trade, guys. Just be careful. Here's yesterday's high. That's what needs to hold on any recoveries if we are moving lower. A break, and you're looking for basically 50,187. It's another 4,000 drop, $5,000 drop from here. So one other interpretation, again, also if we break the lows here, is just the extension off the high yields a pretty clean move into 51.6. So either way, a nice big zone here, $100 zone to look for a reaction if Bitcoin does move lower. Okay, that's everything on my chart, on my list for today. Do let me know if you guys have any other questions or trade setups. If you're getting frustrated with this market, don't get, okay? The longer this lasts, we will get some clear definitive plays and momentum. Already covered Kiwi. Jay, I haven't covered Kiwi, but here's what it looks like, brother. The breakdown, well, that doesn't actually look so bad, does it? Well, this didn't come up on my scan this morning. Okay. Here's our last Kiwi update. It looks like that 618 just finally broke. We're down here. We're down here. This was back on the 15th. So yeah, that's actually a pretty decent move. Let me go back here. Not only is it an objective break of the weekly opening range, but guys, this is actually pretty big. Jay, thank you for bringing this up. Look at this, 71. We've been talking about this for a while. 71.11 to 71.50 specifically. Not only is it the 50% retracement of the entire decline off the highs that we made in 2014, but it's also the 786 of the 2017 drop. It was the yearly opening range lows, the January lows, the February lows. This is big. We close the weekly close below this. You're looking for the corrective move, period. End of conversation. First initial target on the downside comes in at 69.41. It's last year's, or the 2019 highs. Daily chart looks like this. I'd want to give this decline some cover, Jay. So a couple of things I'd know first, just to see what it looks like. which would suggest keep an eye out there. But before that, let's go even more basic. Too steep. Watch that. Watch that. So the low that you made back here in December gives you 70 handle. Just above that is downslope support if this is the proper structure, which we don't have enough pivots off of, to be honest with you. Man, they're stacking up. All right. Okay. This does change things in Kiwi, for sure, Jay. Assertive close below 71 today would be sort of pretty problematic. Okay, I'd be looking lower sub 71.50, that 50% retrace. You'd need downside targets at 70 and 69.40 into 69, this whole zone right here. Here's what the intraday chart looks like. So let me adjust this to the new high. And let's see what this looks like here. Looks decent. Looks decent. So this is one of those sliders, Jay. Be careful. Um, you know, that break, like I said, initial look, just snap approach tells me look lower, look lower, look lower. If this slope is in play, this is kind of one of those sliders no one's going to notice, going to rip. People start getting, oh no, that was a fake break. They start closing out, and then all of a sudden the next downdraft comes. So look for resistance out of 71 if this is going to hold. I'd even choke up bearish invalidation to the weekly open. This retracement's null and void. And yeah, if this is a break, failure ahead of the slope, downside move, looks pretty clean. Immediate decline, Jay, looks a little tired into this slope. Look for exhaustion ahead of 71 if this is moving lower. Again, 70 and 69.40 your first initial targets on the downside. This could be pretty big. If this is a legit break of the yearly opening range, which the yearly open is right here, then yeah, this is big. I can't believe I almost forgot to close out the session not going over this. Thanks, Jay. Short from the yearly open, want to add another short. I First of all, well done. Well done. I wouldn't be adding at the lows, Jay. The trade for you, again, I can't tell you what to do. My humble opinion is I'd be actually shaving a little off if we get into 70. On the rebound, you want to see that exhaustion ahead of 71 to add to that. But I'd be very remiss to tell you to add to the short here, because if you do get some sort of little corrective bounce, you could be 90 pips underwater on that new positioning for no reason. So I'd look for the pick and choose your reentries, but certainly from a holistic, larger technical view, that's big. That's pretty big. Well done, Jay. Hey, more than welcome, man. Thank you. Okay, any other questions? If not, we'll go ahead and wrap things up. Core inflation for the UK and durable goods are on tap tomorrow. So those are going to be the big players for the sterling and dollar. Watch this dollar move. You know, the dollar has been holding its own pretty well, but we need some sort of breakout in some of these really tight ranges. Until they give out, guys, just don't get tangled in the chop. Like I said, the break will be definitive. I think we get that in the next couple of days here. All right, so we'll wrap it up there. Best of luck trading, and I will see you guys right back here on Thursday morning. Cheers.